Recent movements in the cryptocurrency markets indicate a cautious yet evolving landscape, driven by macroeconomic factors, regulatory developments, and investor sentiment. Bitcoin has shown resilience near the $90,000 level despite recent turbulence, with on-chain data revealing notable activity, a rare bullish divergence on Binance blockchain, with withdrawal transactions surging to levels unseen since 2018 and deposit transactions dropping, a classic supply shock signal, suggests strong conviction among large holders that could propel BTC beyond the $100,000 threshold. However, technical analysis points to a bearish pattern called a flag, hinting at possible short-term downside in the near future, implying traders should remain vigilant. Meanwhile, Ethereum trades near $3,200, approaching a historically significant realized price of large whale holders, an indicator that has historically marked trend reversals or periods of accumulation. Analyst commentary compares Ethereum's current range to the pre-rally setup of gold, suggesting a potential breakout if resistance levels are overcome, which could signal a major macro trend shift. Yet resistance at the 50-day moving average and the presence of overhead trend lines underscore the fragility of this recovery attempt amid broader market uncertainty. Market sentiment remains mixed. While some cryptocurrencies like XRP are in undervalued zones per on-chain metrics, others like Ethereum and Solana face resistance and declining user activity. Solana, despite technological upgrades, continues to see declining total value locked (TVL) and waning meme coin demand, hinting at broader ecosystem fatigue. Conversely, Ripple's recent successful approval to establish a trust bank in the U.S. enhances its potential utility in cross-border payments, bolstering long-term bullish prospects despite short-term technical setbacks. Regulatory developments remain pivotal. Major exchanges such as Binance and HTX have received preliminary clearance to operate within Pakistan, signaling increasing institutional acceptance and government engagement in digital assets. The U.S. SEC and CFTC are undergoing shifts, scrapping outdated rules and proposing clearer frameworks that could open pathways for mainstream adoption. Notably, Coinbase plans to launch prediction markets and tokenized equities, reflecting a strategic move towards becoming an all-encompassing platform for diverse assets, while Binance pushes stablecoin integration with One United States dollar, a token backed by U.S. Treasuries and cash, expanding liquidity channels. In parallel, traditional finance voices like Vanguard remain skeptical, dubbing Bitcoin a collectible toy yet acknowledging its potential as a portfolio hedge. Large corporate actions are also shaping narratives. Tether has submitted bids to acquire Juventus FC, while assessments of unrealized losses suggest liquidity strains across the sector. These moves indicate that crypto's integration into mainstream sectors,